Hi, everybody. Thank you for joining. We're going to get started now on our January analyst call. So last time we were here, it was about early mid-December, and a lot has changed since then. Most importantly, is we now have a spot Bitcoin ETF. So it's been a very exciting time in crypto over the past few months. And in fact, the spot ETF has been the single biggest catalyst in crypto markets, driving Bitcoin's price returns over the past 6 months. So we're really at a new level when it comes to this approval. And today we're going to be diving in to understand what comes next. We're going to look at Bitcoin market structure, ETH market structure, and then we're also going to take some time at the end to talk about our Q4 liquidity ranking. So a bit off topic, but we want to show you what we've been doing on the liquidity side. So first is a bit about Kaiko in case you are new here. Kaiko is a crypto data provider. We have been around since 2014, and today we offer 6 main business areas. We have our market data. This is all of our tick level and aggregated data from more than 100 exchanges. We have DeFi and blockchain data. We offer analytics, and then finally rates and indices on the data side. And then we have our research. This is the research team that you have on the call today. And then finally, visualization. Actually, next week, we'll be launching our first data viz product specifically designed for researchers. So you'll hopefully see more about that in a bit. So a bit of Kaiko updates from us. First is we want to thank our partner, Cboe Digital, which just launched their futures on Cboe Digital for Bitcoin and ETH, and these are powered by Kaiko's reference rates. We also just expanded our DeFi coverage to a few new chains and DEXs, and this is data that is available through our data platform. And finally, in case you're new to Kaiko Research, we offer several research products. We have 2 newsletters. We have the Data Debrief sent on Mondays and Deep Dive sent on Thursdays. We have our quarterly report, which we published a few weeks ago, a weekly chart book, and then this analyst call, which we hold once a month. Okay, so today we're going to start with an analysis of Bitcoin markets. So I'm going to have Desi, who's in the room. She's going to come over to the computer, and we'll get started right then.
So I'm going to talk a bit about what happened before and in the aftermath of the ETF approval. Bitcoin price has corrected by around 10% since January 11th. We had a significant rotation between products, with Grayscale seeing more than 4 billion in outflows, which was mostly expected, but still weighted heavily on sentiment. On the other hand, the 9 ETFs have seen significant inflows of around 800 millions. And BlackRock, I think, in terms of AUM, is now above 2 billion, closely followed by Fidelity. So overall, the launch was pretty successful. But as I mentioned, Bitcoin prices are down, and they are where they were in the beginning of the year. We have seen a lot of volatility. So the first chart is actually showing market positioning. We are looking at Bitcoin open interest weighted funding rates. We essentially see that the market has been showing some signs of overheating before the approval. And funding rates have been rising since October. There is a macro reason for this. We know that financial conditions eased significantly in late 2023. And the market environment has changed in 2024. It is much more mixed. Some of the rate cuts are being priced out, which kind of explains the current downturn. The interesting thing to see here is that funding rates have actually declined just before the approval. So we had most of this leverage has actually been flushed out before. And since then, funding rates have been neutral to slightly negative on some exchanges. So next, the next chart is looking at performance. Just to put things into perspective, we have prices down, but they're still up more than 70% over the past year. And Bitcoin has been outperforming most traditional assets, including gold and equities. Correlations are also down. And this chart here looks at the 60-day rolling correlation between Bitcoin and Nasdaq since 2016. Correlation has been negative since early December, but has actually declined pretty significantly last year. So this is kind of improving Bitcoin appeal as portfolio diversifier. The interesting thing to see is that actually since 2016, Bitcoin has been mostly uncorrelated, and except during the bull run and the subsequent sell-off in risk assets. So what happened with trade volumes? This chart looks at Bitcoin cumulative volume data. So a negative number means net selling, positive number is net buying. Essentially what we see is that on most exchanges we had net selling, especially on offshore exchanges such as Bybit and OKX. The only exchange which saw more selling than buying was Coinbase. One caveat here is that it actually does not include the ETF-related transactions because they're going through Coinbase Prime. So next, what happened with market depth? So we were expecting that market depth would start to improve with the approval of ETFs. We are looking here at the 2% market depth for the two top Bitcoin trading pairs, so Bitcoin USD and USDT. We see that market depth has started improving, which is a good news because we had a significant volatility, and it means that market makers have been maintaining their positions. But it has increased only moderately to around 4K, which is basically its levels from early December. It is still below what we had before the collapse of FTX, when we had more than 10K Bitcoin on order books. Breaking this down by exchange, we actually see that the increase in market depth has been driven by offshore exchanges mainly, so mainly Binance. Liquidity has also increased on US exchanges, but at a much slower pace. The impact of ETFs has been much more visible on trade volumes, and the next chart is actually looking at Bitcoin USD hourly volumes in January. We see that we had some heavy trading around US close, which is a difference relative to 2023, where actually volume spiked in the beginning of US opening hours. And if we do this chart for several years back, actually the only year with similar trading pattern is 2021, the beginning of the crypto bull run. So the last chart I wanted to show is this one. It's Bitcoin weekend volumes, because last year actually we had the lowest weekend trade volumes for Bitcoin fiat trading pairs ever. And the reason for this is, of course, that we had the collapse of two friendly crypto banks in the beginning of 2023. We also had Binance experiencing some difficulties with fiat partners. And this has actually, it means that we have more volatility during weekends. The market is a bit less 24/7. And it would be interesting to see if anything changes with ETFs. And now I will give the floor to Clara. She's going to talk about Ether.
Okay, so I think a lot of this call is also about like what comes next. So Bitcoin spot ETF was the single biggest catalyst that we had for crypto markets for a really long time. And so now the second that happened, we got the ETFs approved. Now we're looking at ETH. We have a few approvals that could happen in the next few months, but will this have the same impact? So now we want to answer the question is, are we going to see as much excitement over an ETH ETF, or was it really just around Bitcoin? So we noticed something interesting, that the Bitcoin correlation with Ether, it has dropped to its lowest level since 2021. So historically, the average correlation, this is 60-day correlation, is about 0.7, but this correlation has dropped below this level at the end of 2023 and into 2024, what we see now. And a lot of this is because Bitcoin really saw the most of this rally. It was a Bitcoin-led rally, while ETH has been relatively sluggish. I think ETH's narratives just about its growth and its usage as a network has also seen just sort of a bit of stagnation over the past year, causing prices to not be as strong as they were with Bitcoin. And in fact, we can see that when looking at the Bitcoin and ETH price performance, we can see that since last year, January 1st, 2023, that Bitcoin's returns are far superior to ETH. ETH has really underperformed Bitcoin for much of the past year. And here we have the labels. This is when BlackRock applied for an ETF, when the ETF was approved. And what is interesting actually is in the immediate aftermath of the approval, we saw a complete reversal of this trend. Bitcoin crashed as there was a lot of sell the news happening, whereas ETH surged. And so it's clear that these two assets are sort of heading towards a decorrelation, which is interesting because we haven't seen this for a long time in crypto. Even when we look at weekly trade volume, we can see here that ETH, which is in dark blue, has really had sort of a much more lackluster previous year than Bitcoin. Bitcoin really benefited from a lot of the spot ETF narrative over the past year, and that reflected in volume. But thankfully, over the past couple of weeks, ETH has seen a bit of a turnaround in trade volume. What this chart shows here is every single daily day ranked by trade volume since January 1st, 2023. And it shows here that in 2024, ETH had its highest volume days over the past year. These are the days in orange, and like the top like 5 or 6 were all in the first month of the year, which just goes to show that 2023 was not the best year for ETH. Things were really slow, trade volume was slow, price returns were slow, whereas we're finally seeing a bit of life in ETH markets as reflected by trade volume. If we take a look at derivatives, here we have just charted open interest and funding rates. We can see here the line in gray sort of highlighting when the Bitcoin spot ETF was approved. We can see that open interest at first was a bit flat, and then it's actually fallen over the past couple days, whereas funding rates have stayed just slightly positive. So it shows that there's not that much new capital flowing in or leverage. So markets are pretty neutral right now on the derivatives front. I think one of the most interesting charts, though, this was made by Desi, great chart, is essentially asking the question, Bitcoin had a futures-based ETF that launched 2 years ago. When it launched, it's called BITO, B-I-T-O. When it launched, it was one of the highest volume launches on the New York Stock Exchange ever. And ETH had a similar launch a year later. There were a few ETH futures ETFs that launched, but they had almost no volume. So we can answer the question as, are we going to see the same volumes for an ETH spot ETF? If we just look at futures-based ETFs, the answer would probably be no. We saw huge volumes for a Bitcoin futures-based ETF, but we saw barely any volumes for an ETH futures-based ETF. And you can see here, BITO, that's the Bitcoin one. It's in the top right. It had really high volumes, even though it had a high fee, whereas the ETH futures ETFs are all the way at the opposite end, very low launch day volumes, even though they had lower fees. And so if we take a look further, we can also see that even over time, BITO has performed better than these ETH futures-based ETFs. In the run-up to the approval of the spot-based ETFs, we had BITO in dark blue, saw volumes essentially hit all-time highs, whereas the ETH ones were relatively low. So this doesn't necessarily mean that you're not going to see interest in a spot-based ETF for ETH. But what it does show is that maybe these more institutional investors or even the average investor that would buy an ETF is maybe not as interested in ETH as they are Bitcoin. So now I'm going to pass the mic to Riyadh.
Thanks, Clara. Yeah, so we covered Bitcoin and Ether. So now going to expand that and just quickly go over our Q4 liquidity ranking. Some of you might be familiar with this, but I'll just give a brief explanation. Essentially, we take 5 different components of liquidity, rank the top 50 tokens by market cap, assign point values, and then that leads to this chart that you see here. So the 5 components are the number of liquid exchanges on which the token is traded, volume over the previous quarter, 0.1% market depth, 1% market depth, and spreads. So as you can see, Bitcoin, Ether continue to be number 1 and 2. There's no sign that they will be dethroned anytime soon. Similarly for XRP in third place, has done really well, continues to hold on to that spot. And then things get a little more interesting below that. For the first time this quarter, Sol actually challenged Doge for the 4th place spot. And Sol also passed Litecoin, which was pretty significant. And then you can see at the bottom, we still have CRO, OKB, and Leo, 3 exchange tokens. So no surprise there. Every quarter we've done this, we've seen that exchange tokens have significantly underperformed their market cap. So there's a couple different ways we can visualize this. If we go to the next slide. So this is the difference between market cap and liquidity rank. So on the far left, we have our overperformers, tokens like Arbitrum, really benefited last quarter. And a narrative that's been picking up a lot of steam is like ETH beta. So essentially tokens related to Ether and Ethereum that, have the potential for more volatility, more price gains. ARB has been a big beneficiary of that optimism as well. If we move on down the line, we can see Say was a big overperformer. This is a relatively new token that has done really well on the liquidity front. And there's a couple other new ones, Render, Ordi for ordinals. And you can see in the middle, ETH BTC, right where you'd expect them, right in line with their market cap. And then moving on to the underperformers, again, you have CRO, OKB, and Leo performing pretty poorly relative to their market cap. For OKB specifically, this sort of manifested, I believe it was last week, where there was a flash crash as people were selling. And then at the end, we have TON. So that's Telegram's token. It's sort of an interesting case. I mean, it's underperformed every quarter that we've looked at it. I've talked to some people who think that it's because a lot of it is staked or being used. So I think it kind of points to the idea that this should be used as a piece of context, and underperforming market cap doesn't necessarily mean a token is bad, if that makes sense. And then on the next slide, we have the changes from Q3 to Q4. AVAX, Avalanche was by far the biggest bounce back. Actually, in Q3, it was looking pretty grim, honestly, for AVAX. It had a big price rally, a lot of volume, big liquidity surge. So that was looking good. And sort of on the ETH beta front, you can see that Uniswap and Link, 2 older Ethereum DeFi tokens, had a nice surge last quarter. And then at the end, the ones that fell the most, we have Mantle. Mantle's kind of an interesting case because it really benefited in Q3 from a very liquid instrument on Bybit. Its volume actually picked up a lot in Q4, which subsequently made this instrument less liquid. It made its spreads worse. So it dropped a lot. Even though there is a lot of hype around the Mantle ecosystem right now, with their offering of liquid staking token, METH, that has one of the highest yields for liquid staking tokens. And And the other interesting drop I want to point out is Monero XMR. This is a direct result of regulatory pressure. So there were a lot of delistings, which hurt its volume and hurt its market depth. And then on the final slide, just wanted to quickly show that all of these are now available on our website. So you can go check out, a breakdown of how each token scored. You can sort it by different categories. So I would encourage everyone to go check that out. And there's also a deep dive written that can help explain it a bit more. But yeah, thanks, and happy to look at questions now.
Okay, cool. We can now start with questions. So the first one from Chrisan is, any reason why ETH futures-based ETF had not much interest? So I think a lot of it was probably bad timing. The Bitcoin ETF launched in the midst of a bull run. There was a lot of excitement about crypto at this time. It was 2021, whereas these ETH futures, they launched like very recently, and there has just been, it's just a bit of a more bearish environment. So I think market environment is definitely one reason, but it could be something more. There have historically have not been many options for ETFs beyond just Bitcoin. There's a few like lower tail assets in Europe in terms of ETPs, but it's really the vast majority of market activities for Bitcoin.
Yeah, and also on that, we discussed that for people buying ETFs, they're also forgoing any possible yield that they could generate if they were to stake that ETH, as well as like just inefficiencies with it being futures related. So just something to keep in mind there, that there is that extra wrinkle.
Yeah, good point. Okay, Riyad, do you want to take the liquidity rank question?
I think this is referring to Sol in fourth. Sol has consistently been in the top 5 or 6, I believe. Even when its price slumped a lot, its liquidity still held up very well. I think owing to the big run it had last cycle, where it was listed on, I think every exchange probably that we cover. And so yeah, it's done well. Yeah.
Okay, so another question. Kaiko has previously discussed reduced payment rails into the sector following the March 2023 bank failures. Has that situation changed in the past 9 to 10 months? Has Tether become so widely available that it serves as its own rail into the system? So that's a very good question. So one chart that Desi showed earlier shows weekend trade volume. I think weekend trade volume was one of the biggest impacts of having these banks shut down, because they all had 24/7 crypto rails that would essentially let you onboard onto a crypto exchange even over the weekend. And without them, it became a lot harder for crypto exchanges to enable this. And so the chart that we showed, maybe I can find it, showed that weekend trade volumes here. If we look at Bitcoin fiat trade volume, so that's like a Bitcoin dollar trading pair, that they reached all-time lows in 2023. It should be noted that global volumes hit pretty low levels in 2023, but the fact that it's all-time lows just suggests that that there could have been, the payment rails were probably a pretty big reason why this happened. Tether is still widely used. You can see that Bitcoin stablecoin weekend volume, it did not have as big of an impact. So if that answers the question. We have another one. How are exchange spreads responding to the launch of ETFs? That's actually a really good question. We can look into that to understand if market makers are reacting to the change in fee structures. So we'll look into that hopefully next week if you subscribe to our newsletter. Next is, what are some key considerations for spot ETH ETFs? Anyone else want to answer this?
Yeah, I mean, I think if this is referring to the possibility of approval, I would say it's a little bit murkier than Bitcoin, just owing to the fact that ETH's regulatory acceptance has always been a little bit more unclear than Bitcoin's. I'd also note that I think in his discussion about the Bitcoin ETFs, Gary Gensler specifically cited the Grayscale lawsuit as a reason that he flipped to sort of allow to approve the ETFs. Now that kind of lawsuit doesn't exist for ETH right now, so we will see. But also, as I mentioned before, there is that forgoing of yield that would come with that. So I think that's another consideration.
Another liquidity question. I'll let Riyad answer.
Yeah. So it's essentially just the inverse of the ranking. So if a token is in first, it gets 50 points, and vice versa.
Oh, okay, yes. I will send the link to our newsletter subscription right here. Yes, okay, so you read our State of European Crypto. So Euro stablecoins, we've been covering them quite a bit over the past few months. Historically, they've had very low volumes, but we're seeing a slight turnaround. Again, the turnaround, it's increasing, but it's going from nothing to a little bit. So just a few million, whereas dollar-backed stablecoins still have billions and billions of dollars a day. And so it will just be interesting to see if these actually become widely used. Right now, they're more just sort of experimental and listed on a few centralized exchanges, used a bit in DeFi, but not widely used by crypto market participants. Okay, a question on Vol Surface on BitTo options. So Kaiko does not offer this data. So we don't have a comment on this, but we can look into it. Any more questions? I'm also going to send the link to our February analyst call. You can already register now. And we'll be back and we'll actually be able to show you guys Data Plus, which is our new data viz platform for researchers. So hopefully that will be useful for you. We have one last person typing and then, okay. Thank you all and hope to see you guys next time.
Thank you, guys.
Thank you.